Hi, I'm Bianca Barlow from InvestorStream. Let's delve deeper into the opportunities stemming from the WTI price in the United States. West Texas Intermediate, commonly referred to as WTI, is a global benchmark high-grade oil that is primarily sourced from inland Texas. It is the world's most actively traded commodity. As with all commodities, the price is set by supply and demand. However, the price of crude oil is also heavily influenced by market sentiment. The escalating conflict with Russia and Ukraine, coupled with existing low inventory levels, have analysts anticipating that the price of crude oil will continue to surge. This will directly affect the oil and gas sector, with a significant impact on US producers. A lack of production capacity and investment in the oil sector, owing to COVID-related downturns in demand and ongoing shifts towards decarbonisation, has created market supply constrictions. Although OPEC raised production in February, there are constraints on how much further levels can be raised. The unpredictability of Russia will now further compound these supply challenges. WTI price forecast escalations by the US Energy Information Administration and leading investment bank Morgan Stanley have already been exceeded, whilst JP Morgan expects oil prices to reach $125 a barrel this year and $150 in 2023. These soaring forecasts have been confirmed by the International Energy Agency in their February 2022 oil report. The agency advised that backwardation on the 12-month strip will begin with the April 2022 contract, which has hit double digits for both WTI and Brent. The report further states that despite the significant crude oil price tensions, product price premiums versus the crude markers remain robust and are even rising. As the world moves forward from the heavy restrictions imposed by the global pandemic, demand is set to increase further, applying additional pressure on crude prices. Although many small producers are unable to increase supply in response to these favourable market conditions, AXP Energy is an oil and gas production company that is well positioned to immediately and aggressively capitalise on this opportunity. Listed on both the ASX and OTC, AXP is strategically growing its US daily production by improving current asset performance and opportunistically acquiring onshore oil and gas assets. AXP's Chief Executive Officer, Tim Hart, has confirmed with InvestorStream that their 2022 field development program is now well underway. The company is able to quickly grow production by drilling new, low-cost vertical wells and bringing DUCs online to deliver quick, easy gains. AXP are due to report on flow rates shortly. The drilling team will also be operating back-to-back from one well to the next, leading to a number of anticipated announcements in the coming months. Of particular interest to investors will be the first high-impact vertical infill well to be drilled on AXP's 100% owned Daisy lease. The drill pad is completed, with drilling expected to commence in March. It is clear that although ongoing WTI price increases will challenge end consumers, astute investment in the oil and gas sector, particularly towards companies that have US exposure and are able to respond in a timely manner, will prove to be highly lucrative.